What's up, everybody? Today I'm going to be breaking down my 2022 trading strategy that bagged me over 100% in profits this week. Did have a very volatile week, and we capitalized on it both ways, to the downside and the upside. So, first part of the strategy, first part of any strategy you're ever going to do is going to be market structure. That is the most important thing. You got to know where the market's going. You got to know where, you just got to know market sentiment overall. Got to know what price is going in the market, because that is usually going to dictate what big stocks are going to do. So right here, I'm looking at the NASDAQ futures. This is NQ1. You can also use US 100. So what we're looking for here are lows and highs and when we're setting them. So we're going to use February 2nd highs as our starting point. So here we're going to pick the paint tool. Here is a higher high. Here is a set of higher lows. Here's a lower high. Here is a lower low put in right around the previous lows, right? So this is a hold of these lows. This would be a viable play to the upside to potentially test these highs again. Or what we can see here is we can see the bounce off these lows, lower high, a break of these lows leading to a lower low. That's what we saw. We saw these lower highs. We saw a lower low with a lower high put in right after. Then we see lower lows at 14,100, lower highs around 14,600. Then we see the same lows put in around 14,100, lower high, lower low, lower high, lower low, lower high, lower low, 13,000. And now we're seeing a potential trend reversal. So we did see this level right here. This was a lower high right here, but it was followed by a higher low when compared to this 13,000 level. Then we also saw a break above these previous highs right here with a break above 14,100 on Friday. And we are getting up to these levels around 14,300, which is going to be a big test. The break above this 14,300 can take us to these lows at 14,400, and above that, we can see this level at 14,600, which is a pretty big level, as we did pretty much put in tops here multiple times. So what we're looking for here is this continuation to the upside, followed by a higher low around 14,100. So we want to see this push up, come down, bounce somewhere around this level, then continue to move to the upside. We want to see that higher low being put in, and that will confirm the market reversal. Another thing I do when I'm looking at the market overall is I use the supply and demand levels. So we're going to take it to the 1 hour. So right here you can see 14,250, 14,200 is a pretty big level because of this supply level. So supply level, the idea behind it are when we have these big consolidation levels followed by a big move up or down, is institutions filling orders. Institutions are just big banks, big money. Institutions filling orders, which is then followed by a big move because you have a big influx of money coming in at that level. So here you can see we had consolidation, which is just orders being placed, orders get filled, we come down. Now the idea is next time we test it, the unfilled orders that are still left are now going to get filled on the retest of this level. So what can either happen here is we come up, those sell orders hit the market, the buyers can't hold them, and then we see a move to the downside. Another thing that can happen is we come up, sell orders start hitting the market, buyers can hold it, buyers start absorbing those sell orders or buying those sell orders, and market will stay here, absorb those sell orders, and then continue to the upside. So multiple ways that can play out, but the idea behind it pretty much is we need higher highs and higher lows, and we're looking at these levels as levels of interest intraday. So now we're going to take a look at my pivot levels. So I use pivot levels kind of as support and resistance, kind of not. You'll see when I show you guys pivot levels, we look for them on the daily chart. So if we take a look at Apple, 152.50 was a level that failed to break out on the October 28th. Then it was used as resistance. But on the August 30th, we did get a close above, followed by a move to 157 before finally coming back down. So the idea behind this is once we get above 152.50, we're going to 157. That's the idea. So here you could see on November 17th, got the close above 152.50, touched first target at 157, got the close above this first target, and eventually made a run back up to 165. So now that is a new pivot level. And then as you see here, this day we use 157 sort of as support. We got sort of a close under it, and then we made a move back up to 165. But we did get a close above 165, and then we saw 169. And 169 did prove to be a pretty good pivot level this day. Closed on a 169, saw a move down. Closed on a 169 this past week, we saw a move down. But what I was looking for this week was a test of this 152.50 level, and that's exactly what we got. So as you can see, 152.50 we opened at, slightly dipped under, and then we had a big move to the upside. One thing I look for a lot when I'm looking for intraday and not swing entries is a hold above or below a pivot level. So here we made the move above the pivot level, held there for an hour or two, and then got out of this consolidation and moved to the upside. So I entered once we got out of this consolidation level, and we moved right up to our next pivot, which is going to be our first target. Consolidated under that, so we'll see what happens in the next coming days if we break above and go to 169, or if we reject, come back down to 157. So this play worked out perfectly. Another example of these pivot levels is BA, which is another trade we took this week. Did over 300% on this, did nearly 300% on Apple. But if we take a look at the daily, 188 has been a big level of interest over the past couple months. So this day failed to close under, had a big move up to 202 the next day, came under, closed above, big move up, came under, closed above, big move up, and that's what we saw this past week. So we go back to the 15-minute, just like Apple, opened at this pivot level, came under for a second, but we held above it all day. Once we broke out this consolidation, we ripped to the upside, bought these contracts at about 140. Next day sold them at open right before our target for about 300% gain. I was going to hold these simply for a day trade once we did break out of this consolidation, but we did get a close above our first pivot level at 197. So I did decide to swing these. Opened, nearly touched the pivot level at 204.50. We were off by about 50 cents, but that's okay. Another example is Plug. So this one, we used normal market patterns in conjunction with our pivot levels as targets. So Plug has been in a downtrend. We see a rising wedge. Rising wedge are usually pullbacks within a large downtrend. So we waited for the close under this rising wedge using the 2090 pivot and the 1830 pivot as our targets. If you see here, failed to close under 1830 on February 3rd, bounced off it a couple times, 1830, barely got to close under it. We held this level multiple times right here, second level of interest. So once we did break down out of this falling wedge, got the close under, rising wedge, got this close under, bought some puts, moved down, first target was 2090, got the close under, held them, moved down farther, I sold around here, about a 45-50% gain. The next day we came down, touched the 1830 level right on the money. Boom, right there would have bagged about 250%. You could have also played the rip off this 1830 pivot to the upside, and you would have bagged. This is a perfect example of a way you can play this intraday. You could have played the hold of the pivot. You could have played a break of this 2090 pivot. Multiple ways to play this intraday. Multiple ways to play this if you're swinging. Last thing I want to go over is my golden pivot setup. So right here, golden pivot. I love to use Fibonacci levels in conjunction with market structure and pivot levels. So right here you could see AVGO is in a long-term uptrend. We did break out of this long consolidation above 510, made a big run up to 670, did put in higher lows right here, followed by this higher high. Then you can see we pulled back, made a lower low, followed by a lower high. So this was the high, lower high. And then if we zoom in and we look at the smaller picture, you can see we made this lower low, made this lower high, made this higher low, made this higher high. But if we look at the big picture, this higher high on the smaller time frame was actually a lower high on a bigger time frame. So we used our Fibonacci tool, went from the swing high to the swing low. And then when we look right here, we touched the 6180 level right on the money, rejected it hard, but we did come back and test this previous high at 570 and use it as support. So what I was looking for was, I was still bearish on this simply because of Fibonacci, called for more downside, market structure in the bigger picture, called for more downside. So I was looking for a break and a hold on the 570. We got the close on the 570, gap down 15 points the next day to 550. Contracts did 300% on these, worked out perfectly. So that's pretty much how to play my strategy. Simply put, I'm going to go more in depth on what I look for in other videos. Hopefully you guys learned something from this. Start implementing this. Start looking at market structure. Market structure is extremely important, but no one really talks about it. If you look just at market structure, 9 times out of 10, you're going to know whether to take calls or puts. You're going to know whether to buy or sell. So hopefully you guys learned something from this video. I have more dive in to more specific topics in future ones.